Welcome to a new video. So today I'm going to talk about how to rotate out of commodity futures, which my patrons and me are currently sitting on, and what to do and how to invest depending on what the Fed will decide to do after the 15th, which will be the FOMC meeting. Watch this video till the end because what is happening around you and understanding what is happening around you and what the Federal Reserve will do and all the systems that are in place is very important for not only your investments, but for your life. All right, before we get into it, why don't you consider supporting me on Patreon? On my Patreon, you will find my blog, my premium newsletter, where I post 5 times a week, and my blog post will be sent directly to your email. I put so much effort into my blog to save you tons of time doing research and help you understand the fundamentals and economics. A lot of my followers already made my premium newsletter their daily routine. Not only are you getting a newsletter 5 times a week, but you will also have access to my fundamental and economic data that I'm using to do my research, like my Goldie indicator or my sector rotation guides. They're all on my Discord channel where you can also chat with premium members of my blog. It's a win-win situation because you will get tons of extra content, and on top of that, you will support me, helping me making more and better content in the future. All right, so what could happen and what could the Fed decide to do and how to act accordingly? There's basically 3 scenarios that could happen. So in the first scenario, and what the Fed could be doing, but it's a very unlikely scenario, is that the Federal Reserve takes inflation seriously. That means that they will raise interest rates above the inflation rate. That means that interest rates have to rise above 10%. That will not only crash the economy, crash the stock market, it will crash the economy and cause a major recession. Plus, on top of that, the government is more than likely to default on their own debt if they decide to do that. In that scenario, you want to sell out of all your stocks and all your commodity futures too, and you want to hold cash and maybe bonds. The second scenario is that the Federal Reserve will keep going with their plan and increase interest rates with token rate hikes to show that they're doing something. But those rate hikes are actually doing nothing to fight inflation. Which means fundamentally, nothing really changes. Inflation is still going to be there and interest rates are remaining relatively low. On top of that, quantitative tightening is happening, so the Federal Reserve shrinks their balance sheet, which will crash the bond markets. And together with falling bond prices, you will see real estate fall as well. In this scenario, you want to remain in commodity futures, not in stocks, because Jerome Powell said himself, and the Federal Reserve is planning to do a soft landing. But you never know how the markets will react. You cannot see the future and you don't know if quantitative tightening, another rate hike, or whatever is happening can cause a crash. So they're trying to do something which is nearly impossible. A soft landing is almost impossible because markets by far are largely irrational. And the third and last scenario is that the Federal Reserve simply ignores inflation and just goes back into stimulus. When that happens, you want to rotate out of commodity futures and invest into commodity stocks. Because that last action will bubble up the stock market again and inflation is going to remain high or get even higher because going back to stimulus, printing money will cause more inflation. So that's the hyperinflation route. In that scenario also, you have to watch out of government intervention though. So go back into stocks if the Federal Reserve goes back into stimulus, but you have to consider price controls and profit taxes on food and energy, like windfall profit taxes. Because the government interfering with those 2 things and more will cause profits to go down of those companies and those stocks you own. That means that the stock price will suffer as well. because those companies are not going to remain profitable. So why would you want to invest into those? So very bad. And to end this video, I want to add the CPI print, which will come out tomorrow. So I was hearing rumors and saw some news online regarding Nancy Pelosi and some other insider trading going on. And those insiders are buying up growth stocks and Google and tech stocks and all that stuff. So they're buying the dip, basically. You have to understand, if you do insider trading, you go to jail. But if the government does it, it's totally fine and totally legal, right? Anyways, those news mean that the CPI print is going to be positive. So the inflation numbers will probably go down. So you will see in the news, oh, we reached peak inflation, inflation is going down, and you will see people just follow suit and invest back into tech, crypto, and all that stuff. And on top of that, you have China reopening and going back into stimulus, and you will see kind of like a short bull run in the markets. But don't be fooled, because even the insiders are really stupid. They don't really understand economics, and the fundamentals never lie. Inflation is still high, and I explained that in a video, which I will post here again in a short. But as long as inflation is high and and we don't know what the Federal Reserve will decide to do, don't fall for the trap. Remain in cash, remain in commodities. If you can, remain in commodity futures. Commodity stocks are okay, but the soft landing that Jerome Powell's planning, if that doesn't work, even commodity stocks will crash. I want to end this video by saying thank you to all of you and your support, and I can't wait to see you on my newsletter, on my blog. Thank you guys.